All right, everyone. So in the previous class, we were talking about the preparation of the profit and loss appropriation account. So we will continue our session from the topic where we left the last session. But before starting the today's class, we will first of all recall everything that we did in the previous session. Then only we will continue to the new topic. So in the last session, while discussing profit and loss appropriation account, we have discussed the meaning of the appropriation account, which is wherein I have told you that P&L appropriation is it is a nominal account, in fact, that is prepared with the purpose of distributing the profit and losses among the partners after making all the adjustment relating to interest on capital, interest on drawing, salary, commission, and everything. And since we are distributing the profit and losses among the partner, therefore it is also called the extension of the profit and loss account. So profit and loss appropriation is nothing but an extension of the P&L account. Then we have discussed the format of the P&L appropriation. After that, I have told you the difference between the P&L and the P&L appropriation account, wherein I've told you that trading account basically record all kind of direct expenses, P&L account record all kind of indirect expenses of the business. But in case of P&L appropriation account, we record expenses related to partners only. Okay. After that, we have classified the expenses relating to partners into 5 different categories, which may include interest on capital, salary, commission, rent, and interest on loan. All right. So I have told you that interest on capital, salary, or commission are considered as appropriation of profit. Therefore, these expenses need to be paid. These payments need to be made to the partners only when firm is generating sufficient amount of profit. If there is no profit, firm is not required to make the payment for these kind of expenses. Interest on capital, salary, or expenses, or commission need not to be paid by the business to the partners if firm is not generating profit. But on the other hand, rent and interest on loan is considered as charge against profit. That means irrespective of whether firm is generating the profit or not, firm have to make the payment for these kind of expenses. So rent and interest on loan need to be paid by the business, paid by the firm in all kind of situation, irrespective of whether firm is generating profit or not. So since these are considered as charges against profit, therefore these are recorded under the profit and loss account, right? But interest on capital, salary, commission, these are considered as appropriation of profit. These will be paid only if firm is generating profit. So therefore these will be shown under the profit and loss appropriation account. Okay, then we did this question in the previous class, question number 19, and we made the P&L appropriation in this question. After that, in the last session, I think we have completed question number 20 as well, and then we did question number 21 also. So I hope everything that we discussed in the previous classes is clear to all of you. If you guys have any doubt, please ask me. Only then we will move to the next question. Do you guys have any doubt? Anybody want to ask anything, any question?
No doubt, sir.
Okay, so no doubt. All right, so let's start our session with question number 22. Amal and Bimal are partners of a firm sharing profit in the ratio of 4:1 respectively.
Excuse me, sir. Yeah, yes, we have done it.
We have done it. Okay. All right. So question number. Give it a read to question number 23. Let me know whether we have completed this question or not. PQ and R are partnership, and as at 1st April 2017, the respective capital were 40,000, 30,000, and 30,000. Alexander, we have completed this one too?
No, sir.
Okay. All right, guys. So we will be starting our session with question number 23. So in this question also, we will be preparing the P&L appropriation account only. But let's read it once and then we will continue with the solution. So question is saying that P, Q and R in a partnership, and as at 1st April 2017, their respective capitals were 40,000, 30,000, 30,000. Okay. Q is entitled to a salary of 6,000 and R is entitled for rupees 4,000 per annum. So both the partners are entitled to claim salary of 6,000 and 4,000. So only Q and R are claiming salary. P is not entitled to claim salary. Interest is allowed on capital at 5% per annum and is not charged on drawings. Okay, so interest will not be charged on drawings. Only interest will be paid on capital. Of the divisible profit, P is entitled to 50% of the first rupees 10,000, Q to 30% and R to 20%. Rest of the profit are shared equally. Now this point is very, very important, and I'll explain it. I'll explain how we will be treating this particular statement. Next point is profit. Profit for the year ended 31st March 2018 is given, which is 21,000. But this profit is, the statement is saying that profit for the year ended 31st March 2018 after debiting partner's salary. That means after deducting partner's salary, but before charging interest on capital. Okay. Then question is asking us to prepare the profit and loss appropriation account for the year 2018, showing the distribution of profit among the partners as well. Okay, so question, everything is quite easy in this question. The only thing is that this statement which says that of the divisible profit, P is entitled to claim 50% of the first rupees 10,000 and Q to 30% and rupees 20%, R to 20%. So this statement is a little tricky, and we need to understand what the statement is saying, how we will be treating this. Otherwise, everything in this question is, I think, easy, and you guys will be able to solve this. So guys, I'm giving you 10 minutes. Prepare P&L appropriation account and record the items in the P&L appropriation in the relevant side, and then I'll show you my solution. I'm giving you 10 minutes. Solve this question. Let me know what will be the divisible profit. Am I clear to everyone now?
Yes, sir.
Okay. Hiba is saying, sir, I was absent for 3 classes this week as I was not well and yeah, Hiba, no problem. We will arrange a backup session for you. I'll have to talk to my team. They will inform you about the backup class. Okay. It's completely okay, no problem. We will provide a backup class for you. Okay, everyone else, I want all of you to prepare the P&L appropriation account.
Sir, what happened? We can't see the question paper.
Yeah, just a minute. I think I have there's some problem with my visualizer. I need to fix it. Just a moment.
Okay, no problem.
Yes, this is the question. We need to first calculate the net profit in this question. Calculation of net profit. See, when you will prepare the P&L appropriation account, first thing that we need to write on the credit side, we will be writing the net profit, right? This is the credit side, this is the debit side. So always remember that net profit on the credit side, net profit in the P&L appropriation account is always written before deducting the interest on capital and salary of the partner. Is that clear? You need to write down the value of the net profit on the credit side before deducting the value of interest on capital and the salary of the partners. Now see, in this question, the problem is that, see, profit is given to you, right? Profit for the year ended 31st March is 21,000. It is given in the question. But the problem is that the statement is saying that profit for the year ended 31st March 2018 is after debiting the partner's salary, but before charging interest on capital. That means this 21,000 is the profit after deducting the salary of the partners, right? But in the P&L appropriation account, we need the value of the profit before deducting salary. Is that clear, everyone? We will be required to find out the value of the profit before deducting the salary. Is that clear now, everyone? So therefore, for finding out the net profit, we will prepare a working note. In this working note, we will be calculating the value of the profit before deducting interest on capital and before salary. So I'll write down net profit, that is given in the question, net profit after deducting salary. Net profit after deducting salary is given. How much it is? 21,000. This is given in the question. This profit is given after deducting the salary, but we need the net profit after, but we need profit before deduction of the salary. So tell me what is the salary of the partners? Salary of the partner in this question is given, na? See, read the third line. Q is entitled to a salary of rupees 6,000 and R is entitled to salary of 4,000 per annum. That means total salary payable to Q and R is 10,000, right? So salary of partners 6,000 to Q plus 4,000 to R. Total salary will be 10,000. Tell me, if this net profit is after deducting salary and I want net profit before deducting salary, net profit before deducting salary, So tell me whether I should add 10,000 and 21,000 or I should subtract 10,000 out of 21,000. Tell me. if I want to find out net profit before deducting salary, then how can I find it? Whether I should add 10,000 in 21,000 or I should subtract 21,000 out of 21,000. Tell me.
Sir, add.
Correct. We should add 10,000. Only then we will be able to find out the value of the profit before deduction of the salary. So before deduction of the salary, what would be the value of the profit? It would be 31,000. Is that correct, everyone? Is that correct, everyone? Is that clear?
Yes, sir.
All of you?
Yes, sir.
So the question arises, why do we require to find out net profit before deducting salary? Because in the P&L appropriation account, on the credit side, when we will be writing net profit, we must write down that value which is before deducting salary and interest on capital, right? But in question profit is given 21,000 after the deduction of the salary. So therefore, so as to find out the value of the profit before deduction of the salary, I need to add the salary so as to find out the actual profit before deduction of the salary. So 31,000 will be the net profit. This value, I have taken this value from the working note. Therefore, I am marking the star on it. 31,000. I have derived this value from the working note. I have prepared the working note here. This is 31,000. Net profit before salary was 31,000. After deducting salary, 21,000. By adding salary, we will be able to know the net profit before reduction of the salary. It will be 31,000. So I have taken this value 31,000 in the P&L appropriation account. All right, everyone. I hope this is clear to all of you. Now we will record all the other transactions. See, Q is entitled to a salary of 6,000 and 4,000. Now we can record this on the debit side to partner salary. Partner salary. Everyone is able to understand this now? Anyone is having any problem?
No, sir.
No, sir.
So to partner salary will be how much? So for Q it is 6,000, for R it is 4,000. So Q's capital account 6,000, to R's capital account 4,000. Total salary payable will be 10,000. Done. Okay. Now let's talk about the next expense. In the fourth line, it is written, interest is allowed on capital at 5% per annum and not charged on drawing. There will be no interest charged on drawing, but interest will be payable at 5% per annum on the amount of capital introduced by both the partners. Sorry, capital introduced by all the partners, in fact. So there are three partners, P, Q, and R. P have introduced 40,000 of capital. Q and R both have contributed 30,000. So now we will be giving interest on their capital contribution at 5%. So I'll have to write down 2 interest on capital. Interest on capital. We will be paying interest on capital to P's contribution, Q's, and R. So P's capital account, Q capital account, and R's capital account. Rate of interest is 5%, and the capital contributed by P is 40,000. So on 40,000, we will calculate interest at 5% per annum. So it will be 5% on 40,000 will be 2,000. 2,000. Similarly, 30,000 into 5%, it will be 1,500. And R also contributed 30,000. So on 30,000, we will charge 5% interest. So it will be 1,500 as well. Now let's total it. 3,000 plus 200.
Sir, P is 20,000, right?
P's contribution was 40,000. No? See.
So after multiplying with 5%.
After multiplying 5%, it will be 2,000 only. 40,000 into 5%.
Oh, okay.
How can it be 20,000? It will be half of the 40,000, no?
Yeah, sorry.
It will be incorrect.
Yeah.
It is clear now? 3,000 plus 2,000, it will be 5.
Yes, sir.
So this is interest on capital paid on the contribution of capital by all the partners. Now let's talk about the other expenses. I guess there is no other thing that we need to adjust in the P&L appropriation. We have paid the salary to the partner. We have given interest on their capital contribution. There is nothing more that we need to do. Now, the only thing is that question is saying in the fifth line, it is saying that of the divisible profit, P is entitled to 50% of the first 10,000, Q to 30% and R to 20%. Rest of the profit are shared equally. Now, this is very, very important, and I think you might be getting confused in this statement. So let me explain this. The question is saying that out of the divisible profit, whatever the divisible profit we receive, out of the divisible profit, what do we do? We will 10,000 of the divisible profit will be allocated among the partners in this ratio. See, question is saying that first 10,000 of the divisible profit will be given to Q, P, Q, and R. P will take 50% of this 10,000. This is 10,000. P will take 50% of 10,000. Q will take 30% of the 10,000, and R will take 20% of this 10,000. So P, Q, and R. 10,000 will be distributed among P, Q, and R. Whatever let's suppose divisible profit. For the time being, let's assume that divisible profit is 20,000 or 25,000. Let's assume for the time being that divisible profit is 25,000. So out of 25,000, 10,000 will be divided among P, Q, and R. And in what ratio this 10,000 is going to be divided among P, Q, and R? It will be divided among the P, Q, and R in the ratio of 50%, 30%, 20%. 10,000 will be 50% of the 10,000 will be taken by P, 30% will be taken by Q, and remaining 20% will be taken by the R. So what about the remaining divisible profit? Out of 25,000, 10,000 is divided among the P, Q, and R in the given ratio. So what about the remaining? Let's assume if the divisible profit is 25,000, then the remaining profit must be 15,000, right? So now this 15,000 will be divided among P, Q, and R in the equal ratio. This 50,000 will be divided among all the partners in the equal ratio, 1/3, 1/3, 1/3. Is that clear, everyone? This is what question is saying. Question is saying that whatever the divisible profit that we get, out of the divisible profit, it is written that P is entitled to 50% of the first 10,000. First 10,000, out of first 10,000, 50% will be given to P, then 30% will be given to Q, and 20% will be given to R. And rest of the profit shared equally, and the remaining profit will be shared equally. Is that clear, all of you? We are yet to find the value of the divisible profit. We will find the value of the divisible profit, but let me know if this statement is clear to all of you or not.
Yes, sir, it's clear.
It's clear. So now let's find out the value of the divisible profit. How do we find out the value of the divisible profit? So I'm making the working note number 2. Working note number 2. Calculation of divisible profit. Calculation of divisible profit. So in order to find out the value of the divisible profit, what do? We sum total the credit side, amount shown on the credit side, total of the credit side, and then out of the value of the credit side, we will subtract the amount on the debit side. Subtract the value of the debit side on the debit side. See, in the P&L appropriation account, on credit side, we have only net profit of 31,000. So total of the credit side is 31,000. Out of 31,000, 1000. We will subtract 10,000 and 5,000. Value on the debit side is 10,000 and 5,000. That means 15,000. Right? Is that clear, everyone? From 31,000, we will subtract 15,000. So we will get 16,000. This will be our divisible profit. This will be divisible profit. Tell me, all of you, it is clear to everyone? Calculation of divisible profit is clear to all of you? Okay.
Yes, sir.
Let me explain it again. In order to find out the value of the divisible profit, what do? We simply sum total all the value, all the items on the credit side, and out of the value that we get by totaling the credit side, we subtract all the items on the credit side, debit side. Sorry. So out of 31,000, then we will subtract 10,000 and 15,000. Remaining amount will be considered as the divisible profit. So we get 16,000 as the divisible profit. Now pay attention and try to understand. Question is saying that out the first 10,000 of the divisible profit, first 10,000 of the divisible profit will be distributed among P, Q, and R in the given ratio. The ratio of dividing 10,000 is already given. Out of 10,000, 50% will be given to P, 30% will be given to Q, and 20% will be taken by R. So out of 10,000, P's share will be how much? It will be 5,000. Is that right? And Q share will be 30% of 10,000 will be 3,000. And R share will be 20% of the 10,000. It will be 2,000. This is how we will divide first 10,000 of the divisible profit. Tell me how much is remaining out of divisible profit. So 6,000 is still remaining. And how this profit will be divided among the partners? This will be divided equally. Share equally. That means 2,000 will be taken over by P, Q will take 2,000, and R will also take 2,000. Tell me, guys, is this clear, all of you? This is how divisible profit will be distributed among the partners. Okay, so now we will come back to the P&L appropriation account, and here we will be writing to profit transferred to P, Q, and R. How much will be the total profit that will be transferred to P's account? Sir, in the P's account, for 5,000 will be transferred out of 10,000, and from remaining 6,000, 2,000 more will be transferred. That means 5,000 plus 2,000, that is 7,000 will be transferred to P. Then to Q, 3,000 will be allocated out of 10,000 and 2,000 out of the remaining divisible profit. That means 3,000 plus 2,000. That is 5,000. And for R, it will be 2,000 out of the initial 10,000 and 2,000 from the remaining 6,000. So that means 2,000 plus 2,000, it will be 4,000. And total amount will be 16,000. 31,000 on the debit side, 31,000 on the credit side. Tell me, everyone, is this clear, all of you?
Yes, sir.
Yes, sir.
This is the complete solution. Let me show you this solution on the PowerPoint as well, and I want all of you to take the screenshot. This is how we will be preparing our P&L appropriation. Take the screenshot of this.
So can you show the question on?
Sorry.
Can you show the question also? I didn't take the screenshot of it.
No problem. Give me a moment. I'll show you. After the P&L appropriation account, you need to prepare the working note as well. So here is the working note. First working note will be prepared for calculation of the net profit, and the second working note we will make for the calculation of the divisible profit. Right, divisible profit was 16,000, and I have further explained the distribution of divisible profit in the next slide. This is how divisible profit will be distributed among the partner. 6,000 will be divided into two categories, 10,000 and the remaining will be 6,000. This 10,000 will be divided among P. P will take 5,000. 30% will be taken over by Q, that is 3,000, and Q will take 20%, that is 2,000. And remaining 6,000 will be shared among the partners equally. That means P will take 2,000, Q 2,000, and R will also take 2,000. This is how we will distribute the divisible profit among the partners. Okay, I hope you guys have taken the screenshot of this, and this is the question. If anyone wants to take the screenshot, please take it. Done. All of you are clear about the solution now? Anyone having any problem understanding this? Except Hiba. I guess Hiba must be having some problem understanding this. Otherwise, all of you, for other student, I think it will be easy.
Yes, sir, no doubts.
No doubts. Okay, so we will do one more question and then we will move to a new concept. We will talk about the capital account by the partners. But before that, let's do one more question. Yes, question number 23. Question 23. A and B are partners sharing profits in the ratio of 3:2 with capital of rupees 50,000, 30,000 respectively. Interest on capital is agreed at 6% per annum. Okay. And B is to be allowed an annual salary of 2,500. All right. So during 2015-16, the profit of the year prior to calculation of interest on capital, but after charging B's salary amounted to 12,500. Okay. A provision of 5% of the profits is to be made in respect of the manager's commission. All right. Now you need to prepare an account showing the allocation of profit. That means we need to prepare the P&L appropriation account. Okay. So guys, I'm allowing you 10 minutes to solve this question. And in the meantime, I'll also be solving this question and we'll show you the solution after 10 minutes. But I want all of you to attempt this question and solve it within 10 minutes. Start solving it. I'm turning off my camera for now. If you have any problem, any question, you can ask me. We need to prepare P&L appropriation in this question as well. Done, everyone? Alexander?
Sir, I have a doubt.
Yeah, please.
Sir, to find the commission or the provision, we have to apply a formula.
No, we can simply calculate manager's commission on the profit before charging salary. First of all, see, in this question, the problem is that question is saying that during the 2015-16, firm has generated a profit of 12,500, but this profit is after deducting the salary, right? But I have told you that we need to find out this profit before charging salary. Is that correct? So for finding
Yes.
out the profit before charging salary, what do we need to do? We will first add the amount of salary that Mr. B is withdrawing, right? So Mr. B is entitled to claim a salary of 2,500. All right. This salary has been deducted from the amount of profit. So in order to find out the profit before the salary, what we need to do, we will simply add 2,500 in the 12,500. So when you will add 2,500 in 12,500, you will get 15,000. This profit will be considered as the profit before charging salary. Now on this profit, we will calculate commission of 5%. Is that correct?
Yes, sir.
So, yeah, you need to find out manager commission on 15,000.
Okay,
Let
sir.
me show you how we will. So let me show you. See.
Sir, I got manager's commission 750.
Yes, that is correct. Perfect. 750 is the correct value of manager commission. See. First of all, we will draw the format of the P&L appropriation account. Something like this. On the credit side, we need to write down the value of the net profit. But this net profit will be before interest on capital, before B salary. And also after charging all kind of expenses that need to be recorded under the P&L account. Correct? This we need to write down the value of the profit after charging all the indirect expenses like like the salary of the employee, wages, and everything. Similarly, we will write down the value of the profit after charging the manager's commission. So for that purpose, I have made a working note for finding out the value of the net profit. I have made a working note. In the working note, we will be writing calculation of net profit first. Then profit after charging B salary is already given to you, 12,500. Profit after charging B salary is 12,500. So to find out the profit before charging salary, we will be adding B salary. So B salary is given in the question as well, 2,500. 12,500 plus 2,500, we will get 15,000. This is the profit before charging salary. Now, manager commission, this manager commission need to be recorded under the P&L account. This will not be recorded under the P&L appropriation account. Why? Because it is not partner related expense. It is manager related expense. So we will be recording it under the P&L account. Since it is a P&L item, therefore, to find out the net profit, that will be transferred to appropriation account. What we will do, we will further subtract the manager commission out of this profit. Correct? Ultimately, we need to decide how much profit we should write here. All right. So for that purpose, first of all, we will add the salary so as to find out the profit before charging salary, and all the P&L related expenses need to be subtracted as well. So manager commission, which is 5% of the profit, that means 5% of the 15,000. So 5% of 15,000 will be 750. This will also be required to be deducted. 15,000 minus 750, we will get 14,250. Now this value will be recorded under the P&L appropriation account, 14,250. I've taken this value from the working note, therefore I'm marking star. By net profit 14,250. Tell me guys, is this clear to all of you? Anybody want me to explain it again? Calculation of net profit is clear to everyone.
Clear, sir.
Clear. Other than Alexander, all other students are clear about this. Dhruv, Khushi, Ayan, Hiba.
Yes, sir.
Yes, sir.
Okay.
Yes.
Why are we subtracting B salary first of all? Because we need to find out the value of the profit before interest on capital and salary. So since salary is already deducted, therefore in order to find out the profit before salary, we need to add back the salary. Therefore I'm adding it, 15,000 we got. And we are further required to subtract all kind of P&L related items, P&L related expenses. So from 15,000, we will further subtract manager commission. Since it is not partner related expense, therefore we won't show it in the P&L appropriation account. This will be shown under the P&L account, which we are not required to make. So 750 will be subtracted out of 15,000, we will get 14,250. So I have taken this value 14,250 and written it in the P&L appropriation account. Now we will write down the other expenses. So other expenses will be interest on capital. Interest on capital is how much? Question is asking us to give 6% per annum as interest on capital. So firstly, Mr. A will be provided 6% interest on his capital contribution of 50,000. So on 50,000, Mr. A will be given 6% per annum. That means he will be given 3,000. And Mr. B will be given 6% per annum on his capital contribution of 30,000. 30,000 into 6%. So it will be 1,800. Okay. And B salary. Now we need to write down the B salary. B salary is also given in the question. B's salary is 2,500. So 2,500. This is it. Okay, now the remaining amount will be distributed among the A and B. So first of all, we will total the credit side 14,250. Out of 14,250, we will subtract 3,000, 1,800, 2,500 to find out the divisible profit. So let's do that. 14,250 minus 3,000 minus 1,800 minus 2,500. So we will get 6,950. 6,950 is the divisible profit that need to be divided among A and B. So tell me in what ratio they will be sharing 6,950. In what ratio they will be sharing this profit? Anyone? This profit will be shared among A and B in the ratio of 3:2. This is also given in the question. Ratio of sharing profit is given in the first line. A and B are partners sharing profit in the ratio of 3:2. Therefore, we will distribute this profit in the ratio of 3:2. So 69 out of 6,950, Mr. A will be entitled to claim 3/5 and B will be entitled to claim 2/5. Is that correct, everyone? Everyone is clear about this? Anyone
Yes,
having
sir.
any doubt?
Yes, sir.
Okay. So all you need to do is just to calculate the 3/5 of the 6,950 and 2/5 of the 6,950. Done. Now we will tally both the sides. You should get 14,250 on both sides. This is how we will prepare P&L appropriation. Note it down, everyone. Let me know when you are done.
So, excuse me, sir.
Yes.
Sir, in class when we were doing a similar question, teacher was like, we have to use a formula that we learned in 11th or something like that.
In order to find out the manager's commission.
Yeah.
No, I guess that formula is not applicable in this particular question.
Okay, understood,
You
sir.
need not to apply that formula in this question, because
Okay.
question is simply saying that we need to pay manager commission at 5%, right? And this commission need to be paid out of the profit. So we will simply calculate the profit, and then out of that profit we will calculate 5%. This is it.
Okay, sir.
All right, everyone noted it down. So can we move to the next concept?
Yeah, yes, sir.
Yes, sir.
Okay. All right. So now let's talk about the new concept, which is the formation of the capital account. So since we are already out of time, so we will be able to talk about the formation of the capital account in the next session only in detail. But let me introduce you with this particular concept, with this particular topic. We will be talking about the formation of the capital account in the next session only. But let's just understand what is actually how formation of the capital account is done in case of partners. See, as far as the formation of the partners capital account is concerned, partners capital account can be formed by following two methods. We have two methods for the formation of the capital account of the partners. Now, one is called the fixed capital method and the other is called the fluctuating capital method. Fixed capital method and the fluctuating capital method. Under fluctuating capital method, we are required to prepare one account only, which is called partners capital account. And by preparing partners capital account, we record all kind of transaction relating to partner in one particular account only. when we apply fluctuating capital method for the formation of the capital account of the partner, as per the fluctuating capital method, we need to prepare only one account, which is called partner's capital account. And in this particular account, all the transactions are recorded, whether it is relating to the introduction of the capital, addition of the capital, drawing by the partner, salary of the partner, commission of the partner, profit distribution among the partner, all kind of transaction relating to partner will be recorded at only one place, which is called partner's capital account. This is done in case of fluctuating capital method. All right, so some all the transaction such as the opening capital of the partner, addition in that capital, partner salary, partner commission, interest on capital, drawing, interest on drawing, and closing capital, everything will be recorded at only one place, which is called partner's capital account. All right, this is as per the fluctuating capital method. And this kind of account is formed in case when we follow fluctuating capital method to prepare capital account. So when you are using fluctuating capital method, in that case, this kind of account is formed. On the credit side, you can see we'll first of all write down the value of the write down the opening balances by balance. Then any kind of introduction or addition in the capital will be shown on the credit side. Interest given to the partner will also be indicated on the credit side. Commission paid to partner, salary received by partner, all the and any payments, or you can say any transaction that will increase the capital of the partner will be shown on the credit side of the capital account of the partner. And all kind of transaction that will lead to the reduction in the value of the capital of the partner will be shown on the debit side of the capital account. Is that clear, everyone? So in case of partner's capital account, we will be forming only one account. And in this account, we will record all kind of transaction relating to partner. Transaction that will enhance, that will lead to the addition in the capital, that will increases the capital, will be recorded on the credit side of the capital account, partner's capital account. And all such transaction that will reduce the capital will be shown on the debit side of the account. All right, so the thing is that every transaction relating to partner will be shown under one account, which is called partner's capital account. But in case of, you can say, in case of the fixed capital method, there is a little difference. We need to prepare two different accounts for recording the transaction. In case of fixed capital method, we will be preparing two different accounts for recording the transactions of the partner. So what accounts are prepared under the fixed capital method? We will talk about this in the upcoming session. But for now, just keep that in mind, that transaction relating to partners are recorded in the capital account. And such capital account can be prepared by following two methods: fixed capital method and the fluctuating capital method. As far as the fluctuating capital method is concerned, only one account is prepared, and all transaction, whether such transactions is leading to increase in the capital or decrease in the capital, is shown in one particular account, like salary paid to partner, commission paid to partner, interest received by partner. These transactions will increase the value of the capital, thus shown on the credit side. And transactions such as interest on drawing and drawing made by partner, all will be shown on the debit side. Okay, but treatment will be different in case of the fixed capital method. So we will talk about these different types of account in the next class. So since we are already out of time, so we will continue from this point onward in the next class only. I hope everything that we discussed in today's class is clear to all of you. We did 2 questions in today's session, and I would request all of you to revise the previous concept so that you do not forget the previous things that we have already discussed. And in the next class, we will be talking about some new concepts as well. So this is it, guys. Thank you so much, everyone, for attending this session. We will continue from this point onward in the next class. Till then, all of you, take care. Goodbye. Allah Hafiz.
Excuse me, sir.
Yeah, okay.
Alexander. Yeah, I'm having my first periodic test on 9th accountancy. So will we be able to finish the portion by the 9th June?
What is the syllabus for your periodic test?
I think it's the full first chapter till goodwill or something like that.
Valuation of goodwill.
Yeah.
Uh, I guess we will be able to finish that before your
Okay.
test.
Okay, sir. I will update you with the portion if there's any change.
Yeah, sure. Exactly.
Okay, sir. Thank you so much.
Okay, everyone.
Bye bye.
Thank you so much.
Thank you, sir.
This is it from my side. See you in the next session. Thank you. Goodbye. Take care.